There are two trends that bubbled up to the surface in this week's housing market data. We talked last week about how the price reductions leading indicator has been growing more bearish for home prices. That continued this week. The percent of homes on the market with price reductions ticked up again this week. That's unusual for how early in the season it is. The other trend is more subtle, but it's worth exploring. And that is that the potential home sellers see weak demand in the market. They see offers not being made. They see these price reductions, and those potential home sellers are choosing not to test the market. So inventory isn't shrinking yet, but the trend we're seeing is that of fewer home sellers in relative terms. And if potential home sellers don't list their homes, that'll keep a lid on supply growth. So we're going to spend more time on this today because it is a potential reversal from last year's trend, and the data is coming in counter to my expectations for 2025. So I'll explain more in a minute. These trends are national, of course, taking into account every zip code in the country. Some markets are underperforming and some are much tighter with supply and demand. Our February webinar is where we dive into the local markets to see the trends and see the difference. That's next week, Thursday, February 20th at 10 a.m. Pacific. We spent an hour to cover all the details in the data. These webinars are limited to 1,000 attendees, and we get way more than that each month who want to join. So you can reserve your spot now. There's a link in the description below. Click that to register for the HousingWire Altos webinar next Thursday, February 20th. I'm Mike Simonsen. I'm the president of Altos Research here at HousingWire. Let's take a look at the data for how February 2025 is shaping up. So over the last year, we've been in an environment with about 5 to 10% more sellers each week than a year prior. The new listing stat that we discuss here has been growing. Not a ton, but slightly more sellers. So I took this as a sign that the market was slowly normalizing and that inventory would continue to build throughout 2025. But in recent weeks, we're only averaging about 1 to 2% more sellers each week. And this week actually had fewer sellers in total than the year prior. The trend has been 10% more sellers, and now the trend is almost no growth. The post-pandemic era has been characterized by very few home sellers. As we're 3 years post-pandemic now, I've been seeing these signs that the market was normalizing. Every year we have fewer people locked into ultra cheap mortgages, so we've had more sellers slowly coming back to this market. In the fourth quarter last year, we finally saw home sales growing. The trend of more sellers and more sales each week seemed poised to continue into this year. But there are some signs now that the housing market is stagnating again. Specifically, I'm talking about the weekly new listings volume compared to a year ago. So we know that home sales volumes have fallen in January, and now that momentum with sellers' new listings each week seems to be evaporating too. So fewer sellers each week implies that we'll have a cap on inventory growth this year, even though demand is weak. So fewer sellers means less inventory and fewer sales. So I thought I'd start today with this different chart than what we usually share here. In this chart, I'm showing the percentage change in new listings volume from the year prior. The above the line means the market is growing. Below the line, it's shrinking. So the most obvious point in this chart is July 2022. That's when sellers just stopped abruptly. That moment was a powerful signal that inventory had a cap for the year 2023. So there were just dramatically fewer sellers each week. So then by November 23, sellers re-emerged a little bit and the line went positive. So most of 2024, there was slightly more sellers than the year prior. And we've talked about that growth all year long. But look at the trend now towards the right end of the chart. The weekly growth in sellers is shrinking. See how the trend is slowly trending lower. And in fact, the line turns negative more frequently now. So this is not an abrupt change like July of 22, but it implies to me that potential home sellers are frustrated, and that means inventory doesn't have a ton of momentum for growth coming up. There are just barely more sellers now than last year. Some weeks we have fewer sellers than last year. Any inventory growth now is because demand is really weak. It's not coming from the supply side. So the takeaway here is that if you are assuming that inventory will surge in 2025, that trend sure does not appear to be underway. Now, we still expect inventory to grow over 24, but watch this new listings trend to see what happens next. Okay, that's the percentage change. This is the total count of the unsold new listings each week. There were 54,000 new listings unsold in the first week of February, plus another 10,000 new listings at immediate sales that are already in contract. So as I mentioned, there were slightly more new listings unsold than a year ago, just slightly more, but there are 30% fewer immediate sales than a year ago. So of the 64,000 total sellers this week, almost 10,000 are in contract, leaving 54,000 to add to the active inventory. While there were 3.8% more unsold new listings than a year ago, the total count of sellers is actually less than a year ago, 64,000 now versus 66,000 then. So in this chart, each line is a year. The 2025 line is emerging at the left end of the chart. And you can see that there is still a tiny bit more unsold new listings than last year, but there's not a lot of momentum for significant inventory growth. The purple line here is aiming at the low end of the chart, just above last year's blue line. Many of those gray lines from years past show that it would not have been uncommon to have 70 or 75,000 new listings unsold in February. And as we started the year, I was more optimistic that we'd see this year's seller curve approach those previous levels, but now there are just 54,000. So when we track the supply side of the equation, we want to watch both the weekly level of new listings and the total inventory of unsold homes. And even though new listings volume is climbing for the spring, there were 10% more sellers this week than last, it's starting to look like inventory growth will be capped. And as a result, the available inventory of unsold single-family homes on the market this week fell by 40 basis points. There are now 632,000 single-family homes on the market around the country. That's down from 635,000 a week ago. Inventory fell for the second week in a row. Now, it's not unusual for this time of year to have a down move here or there in the total inventory count. That's not unusual. It is counter, though, to January's trend a bit. Inventory rose through January with weak demand, but in February, inventory has shrunk a tiny bit. So I think that's related to this trend of discouraged potential sellers that we just covered. The lowest week of the year for inventory was the second week of January. Our forecast model expects inventory to pick up in the next couple of weeks and then consistently grow in March. Notably, there are slightly fewer homes on the market now than the model expected a few weeks ago. In this chart, we're looking at the total inventory of unsold single-family homes on the market over the last decade. There are 27.8% more homes on the market now than a year ago. That percentage gap, has not grown in several months. When you look back longer in history, the question is, when does inventory reach the old normal levels before the pandemic? We still have 17% fewer homes on the market now than in February of 2018. It's going to be really fascinating to see if we cross that threshold this year. I believe it will be healthy for the housing market to get to the old normal levels of inventory. But I'm growing less optimistic that we'll get there in 2025. Now, one reason that potential home sellers are getting cold feet may be because they can sense pricing weakness. And we pointed out this trend last week. The percentage of homes on the market with price reductions from the original list price is now at the highest level for February in over a decade. Price reductions ticked up by another 10 basis points this week to 33.2% of the homes on the market. So in this chart, the purple line is for 2025, and the green line was back in 23. Notice at the left end of the chart there, the 2025 line has crossed higher than 23. At the time in 23, price cuts were declining each week. This was a signal of improving demand and support for home prices. In early 23, we talked about this, and it was actually a very contrarian observation at the time. Everyone thought home prices were tanking, but we could see in this price reductions indicator that each week sales were happening, so fewer price cuts were needed. This year, the opposite is underway. Price cuts are ticking up each week, and that's very unusual for this early in the season for it to be happening. Last year, just over 30% of the listings had price cuts, and it was declining by like 40 basis points per week. This year, the leading indicator for future home sales prices is weaker than last year, ticked up by 10 basis points. This does not bode well for home prices in 2025. If you are a home seller, a potential home seller this spring, this says to me that you want to be ahead of this trend. You want to price the house properly from the start. Don't wait until pricing conditions worsen from here. Local markets vary, of course, and you can look up actually price reductions in any zip code in the country with the Altos data. We'll discuss a lot of the local markets in the webinar next week. The median price for all the single-family homes available in the U.S. this week is $425,000. That's essentially unchanged from a week ago and is also unchanged from last year at this time, 0% change. The price of the homes going into contract, these are the homes whose sales will close in March, basically, was $389,000 this week. That's a little step down from the week prior and is only 2.4% more than last year this time. So that's the data we're looking at here. The purple line at the left end of the chart, the home prices are nominally just a little bit above last year, but in real terms, home prices are actually below last year. Some things to keep in mind about the home price trends. Even though home buyer demand is weak, and we have data that shows impact on prices, there's no sign of big declines, like 5% or more in the national data. There are plenty of markets where inventory is sufficiently tight that home prices are pushing up still, and there are some markets where home prices are sliding lower. Home prices are staying flat or even slightly lower for an extended period is unusual in the history of the housing market, but it is probably what we're in for, staying flat or even slightly lower for an extended period, multiple years. And it slowly helps the affordability crisis. Incomes have been rising faster than home prices, and that's a good thing. On to sales volumes. So there were just over 57,000 new contracts started for single-family homes this week across the country. That's up a couple percent from last week, but it came in 5% fewer than the same week a year ago. So the slow purchase market continues into February. In the fourth quarter, we were optimistic that home sales growth would continue in Q1, but that's not happening as of now. In this chart, we're plotting the home sales with the newly pending contracts each week for this year and last. In the fourth quarter last fall, home sales were about 5 to 10% more than a year prior. Now those gains are essentially gone. The 2025 line here is coming in just below the 24 line. And this is what we're counting in the new contracts pending each week. So homes take about 40 days to close the sale. So most of these sales will close in March. And it sure seems like the headlines for home sales are going to be bearish for the next few months as other outlets pick up these trends. So this is how we wrap it up today. We can see fewer sales happening. We can see the weakness in demand impacting prices. And we can see that the potential sellers are not dumb. They're waiting until conditions improve. Okay. That's all the data we have time for today. If you need to communicate about this market with buyers and sellers, you should join us at Altos Research. Go to altosresearch.com. You can sign up for a free Altos account to get your local data. We'll help you dive into that local market and help you start helping people understand the housing market today. So go check that out. There's a link below. Thank you.